now at the question and answer session of the second NBC briefing, the governor of the Central Bank of Nigeria, Godwin Emefiele, made the clarification that Nigeria has not changed its FX policy and still runs a managed float. Head of the fixed income and FX at Chapel Hill Denham, Dipo Ajayi, joins me now as we look at Nigeria's FX policies over the years. Thank you so much for your time today, Dipo. And first, let's get your take on the FX policies that we've seen play out since we've had the governor Emefiele on board.
Well, since the emergence of Governor Emefiele as the CBN governor, we've had several issues with FS, and I think if you look at it critically, before 2017, when the oil price went as low as $28, that's also affect our reserve and the capacity for the CBN to actually defend Naira was not there. So as a result, we were actually badly affected. And also, same thing is currently happening now. But if you actually now to judge the CBN governor, considering the FX policy that we have adopted over time, I think I will rate him below par. And one of my reasons to do that is because we have failed to actually liberalize the FX markets. And like I mentioned earlier in 2017, we are in the same shoe with Egypt, and Egypt was able to adopt a more liberalized FX strategy. And as we speak now, you and I know that Egypt is one of the destinations for FX inflows for both FDIs and FPIs. So if you have to now judge based on that, I think the CBN governor have performed below par. So also, if you also look at it from the angle of the fact that as we speak, we still don't have a unified exchange rate as we speak. We have, as we speak now, we have close to pre-exchange rate levels, and that is not so good. And most international organizations, the international financial organizations too, has complained. And I think based on those things I've mentioned, I will actually rate him below par.
All right, but in helping us to make sense of what we're seeing play out there, why is it so difficult to move to that market-determined rate?
Yeah, there's one thing that is crystal clear. If you look at it globally, like close to 80% of countries, they more adopt the managed floating system. You hardly see any country that will actually commit their FX into the hand of speculators to actually play around. However, that does not stop us for us to have a unified rate. You can have a unified rate, yet you are able to manage your currency appropriately. Before now, in 2006, 2007, we were having a unified rate, yet the CBN comes into the market intermittently to actually regulate FX. Considering that CBN still remains the highest earner of FX in the market, indirectly, and they are still saddled with that responsibility to actually provide flows to the market. So as a result of that, I think it still falls within their responsibility to actually create liquidity in the market, but that does not stop them from actually creating a more unified market.
All right, but let's look at the role of oil in Nigeria's FX policy so far. We've seen oil prices continue to tumble more recently, although today we've seen that it's been up for a bit. But I'm trying to understand, how that dynamics is playing into Nigeria, and what's your outlook in the medium term?
You see, currently, because of the fact that we are not currently having a stable FX system, we are not enjoying the impact of the oil prices, or upside movement in oil prices. This year, oil prices are tested close to $70, and yet we have not seen the impact in our market. Yet we are still having Naira still under pressure. Now, if you now compare to when oil price now tumbled, of course, it will get worse. So for us to be able to enjoy the upside movement in FX, I think the CBN should capitalize on this window to quickly liberalize the FX market, unify the rates, and also find a way to actually attract foreign inflow into the market. Nigeria, as we know, oil still remain like 90% of our FX revenue. So if oil is 90% of our FX revenue and we are not seeing the impact even when oil price is going up, what do you think will likely happen when oil price tumbled? So I think the CBN needs to quickly think twice at this junction to quickly leverage the window that is available now, considering that oil price is still high. For this year, we still expect oil price to still go higher than where it's currently trading. But we will not see the impact if we are not prepared for the advantage that will come as a result of that. And the only way to prepare is unify your rates and create and ensure that your asset class are attractive to foreign investors to actually come into your market.
All right, Dipo, finally, let's just look at your feedback from the MPC meeting there, the commenting on the inflation. The central bank governor made a note that we expect a moderation in inflation from May. What do you make of this?
Well, I think I have a contrary view because I still see inflation to still continue to go northward till maybe Q3, and we have a lot of factors that is playing out on this front. Food deflation, we are not seeing the end to food inflation anytime soon. Food inflation is a global crisis, although we have our own peculiar aspects to it, and our peculiar aspect to it is the issue of security, and also our FX crisis is also a contributing factor to the current inflationary pressure. And also we have a view that oil price will continue to go northward, and if oil price continue to go northward, we expect a PMS price to actually go up. If PMS price go up, we know the way we operate in Nigeria. Every other indices will actually go up as well. So if you want to look at it from this perspective, I'm not sure we are seeing the end to this inflationary pressure anytime soon, except the CBN actually shift focus from a more of growth pursuit to find a way to actually contain the current inflationary pressure.
All right, then, Dipo, quite a lot to still look at there when you look at Nigeria's FX policy. Dipo Ajayi is the head of fixed income and FX at Chapel Hill Denham.